Welcome to Trading Lounge and the US Indices report, and we'll cover the S&P and the Nasdaq. And with the S&P on the daily chart here, wave A is in place and wave B is in place now, and we're working wave C to the downside. And normally there's some sort of equality between wave A and wave C. So I think that the 2000 would be a reasonable target sort of area, but we'll need to look at the internal structure as it develops. It's also possible for the market to pull down into this rectangle box, the top being the 50% and the bottom being the 61.8%. That's a real possibility as well. So once again, we just really need to see how it's going to unfold, if it's going to extend or if it's going to be short and so on. On the intraday charts here, starting with the 2-hour chart here, we're looking at it like this here. So from the top of wave 1, we're looking at all of this as the A wave here, then the A, the B and the C wave here, coming into the 61.8% mark here at the 2080 roughly, and then we're looking for 5 waves to the downside here. Now, this little move down through here, it doesn't appear to be 5 waves. It looks more like wave 1, back for wave 2 of 1 degree, then the next smaller degree, which is actually a bigger structure, down for 1 and back for 2 here. But when we look on the cash market at that little structure here, if you don't mind, this is the move down through to here. You can see that it's a very nice 5 waves in terms of 1 and 2, and then 1 and 2 and 3 and 4 and 5 for the third, the fourth wave, and the fifth wave unfolding here. I need to pull that apart. There might be one more little low in here into the midpoint 2050, but certainly there's going to be support down through here, and this is where we could see the bounce. So all of this being wave 1 coming down to here, and then wave 2 coming back up to the 61.8% mark, which will be at the 2072 area there. So that's why I've labeled it all of wave 1 here, and wave 2 coming back to the 2072 area roughly, and then working lower in wave 3 here. I don't know if wave 3 is going to extend or how it's going to extend, but you need to trade the levels rather than a time frame, so to speak. Time frames are also a little bit empty as well, in terms of, you may be trading on a 15-minute bar or 5-minute bar or whatever, but it's, you don't know how many orders are being traded in that particular time frame unless you're on a tick chart as such. So it's easier for us just to use the levels. So group 1 here is 10, 20 and 30. The midpoint is 50. And then we've got group 2 here at 65, 72 and 80. They're the 3 groups basically within one minor level here. So 2100 is minor level 1, and all of these are sub-levels here. So we're working through the sub-levels here, and what we can see so far in this wave B here, we're starting to see that 80, 72 and 65 will need to be all retested. Well, they are being retested. So it's working to the underside of this, but the next support, of course, is the midpoint 50. So I find that the market can travel quite quickly between the number 5 and the number 3 here. And that's the same from the upside as well, between 5 and 8. Once the market enters into 10, 20 and 30 here, group 1 here, there will be support on top of group 1, but the market will be slow through this area through here. And I say that as a general comment, and that general comment would probably be about 80-90% true, because the numbers are so close here, 10, 20 and 30, they attract the orders there, and the market tends to bounce around a lot in group 1 when moving into group 1 as such. Okay, so that's really it there on the 15-minute chart, and we have been working the hourly chart here, as you know, but it's the same, so we don't need to go there. And the same with the 15-minute chart as well. We're looking for just explain another little trick here as well. So if you know, this doesn't look like the best count in terms of 1 and 2 and 3 and 4 and 5, but we've taken that off the cash market and sort of putting it in there. This is the 50-60% retracement level of this move down through to here, and this normally catches the first wave down. It does look like a corrective ABC correction, so we need to be mindful about this. So if this market finds a solid support on 72, then I mean, a tested support, not just popping its head up like this here, but really sitting on it, then you may need to look to this is at the point I'd be wrong, okay? And then you would add on to the 80 here, or leave it till the 80 and add on at that point there. So if I'm wrong, the 2080 would become the support at that stage there. But what I normally find is that when you've got the 61.8% mark here of the previous swing here, if it's in 5 waves coming down here, then you know that you'll go for the correction. If it's only 3 waves down to here, and it certainly looks like that, then we would see further upside there. So just be a little bit mindful of this particular rally here. And like I said, a solid support on 72 here would ring alarm bells, and then you'd need to be long on the support of 80 and then long up this side here. But while it's in its rally here and the cash market it's got those 5 waves down, I'd be very careful about that. Also, too, we can move on to the Nasdaq. The Dow is much the same. So on the tech stocks here, just on the daily chart, once again here we're looking at wave 1 up here of minor degree, and then wave 2 back here into this space here. So we were always looking at this number here, the 4200 here. We've got the first wave down. The B wave didn't quite reach its 61.8 retracement level, and you know, maybe it needs to do that before it moves down to the 4200 here. So on the daily chart, sorry, on the 2-hour chart here, we had a really lovely 5-wave structure to the downside here, and that really helped us a lot with the S&P 500, because this 5 waves down here would have to play out with another 5 waves down here after we've got our correction to around this point here. So in this case here, this wave could be shorter than this particular one here. Now, if I was wrong here, we haven't actually reached the 61.8% mark here. It's not the end of the world, but we could possibly still be in it, really, in terms of the Nasdaq, with an A wave here, a B wave here, and then a C wave up here for 5 waves up in this direction. So this is possible. So even when you get 5 waves up here, then still be careful, because we'd still be going down after that as well, you know, in terms of that 5 degrees. So just be mindful if you're on the Nasdaq stocks in this instance here. Of course, we're coming into group 1 here, so but these are minor levels in this particular case, so 5, 3, 2 and 1, so to speak. So we'd always expect support on number 3 coming down for the bounce, which normally comes back to the 4, and it can go higher, but 4 is just normally where it goes to, and then working lower from that point there. So it's, you know, still, I wouldn't expect the length of wave A here to equal wave C here in this case. So let's just see it unfold. And of course, the trend that we're looking for is up for wave 3 here. That's our main event, and navigating through this one through here. And I'm really talking about equity through here, not terms of trading. If you're trading through here, then you would wait for this number 43 to become the retested resistance, and then you'd trade down to 442 at that stage and get out, because there'll be a bounce there as well, of course. And then you've got all your sub levels in between 2 and 3 here of minor degree. All right, well, that's it. Thanks for tuning in. Cheers.